right, so in this video, we're going to be going over a rejection zone, or what's also called a rejection block. It's really just a zone if you look at it as classic support and resistance, and we're going to be teaching how to use it as a rejection block. So, how to find zones on the daily, the 4 hour, generally, that's what we look for. We look for them on the daily and the 4 hour. As we get in, so in the advanced course, we talk about how to use them on the 1 hour, but for right now, we're just going to be using them on the daily and the 4 hour. The main thing that you need to know is that zones have liquidity. That's really it. Zones have liquidity in them. That's why we would look to use them. So right here, we just have some price movement. And instead of marking every single zone like classic support and resistance would do, what we're going to do is we're just going to mark the highest one. And we would mark the lowest one too. We'll go over an example of that too. So right here you could see we're going to mark from the highest body, and then we're going to mark it all the way up to the highest wick right there. Now, when we mark the highest body and the highest wick, now we have a range. So we're also going to mark 50% of that range. And you can see here they don't come all the way back up to that zone. But at a later time, that zone could be very useful. And so this is how we would look at it. We would want to see it trade up into the zone, grab some form of liquidity. If it goes short, we would want to see it reject that zone and then probably retest the low of it. Not every single time, but this is just the general framework we would follow. So we would want to see these 3 failed swings. Right there would be our structure that we could trade into. After we fail at the middle, we fail here at the low of the zone, and then we break structure. That would be where our main focus is. Now, in the event that we break the zone, this is what we would expect. We would expect them to reach into that zone, give a false short, but then where that structure should have been shorted, you'll see them punch through that. Again, this goes back to our buy stops and sell stops. So they're grabbing those sell stops, then punching through the buy stops here. A lot of time, what we'll see before they continue is they'll come back to retest that 50% or even this low and then continue higher. So going right here and looking at some setups on the daily and the 4 hour, let's look at an example of a zone. So let's see, this one here is the one that we marked. I don't think we've made it back up there quite yet. So for example, let's look at this low. So in the low of this range, we had right here this as a zone. And like I said, it's also known as a rejection block. So we're marking from that lowest body down to the lowest wick. And after we have done that, what we're going to do is we're going to stretch it out, and then we're going to mark 50% right there. And we'll make that line a little dash, that way you can see it. So now when we go back into that level, let's just go to the 30-minute chart. You can see here was the original zone. They tried to challenge it in here. Oh, why do I keep losing the price? So they tried to challenge it. And then when they try to challenge it, they fail. They fail to make it through that low. So they trade to this zone, then they break structure to the high side, small retracement, and off to the races. They don't come back. So that is how we're going to look at these zones. And you can see they reach back here. This was that interest rate decision. So what's the market trying to do? 1, 2, 3 pushes short. They're trying to knock people who are long out. Everyone that was trying to chase price all in here, they got taken out. So what happens? Retail will always do what? Chase price, and market makers will always manipulate price. So this pullback here is all manipulation, and then you can see that because of this rally here. So let's look at one more example. Let's try to find a different pair. Let's go to dollar. And let's look here on the 4 hour. So here would be an example of a zone where they trade to it or near it, and then they start breaking down. So they don't make it all the way there. Let's check out the daily, see if we have anything to work with here. So this actually does not look like a bad one here. I believe that we used this one when we were trading it. So right here, we would measure from that body up to the highest wick. And just for sake of time, I'm going to leave the 50% out until we get to the lower time frame. So right here, you can see that larger zone. And if we cut it in half and we added a 50%, look roughly like this. So you can see that the zone is traded to, and it does not want to go short. So what are we thinking? It's most likely looking long. So we get to the 50%, retraces, ends up going long. Trades to the top of the zone and when it returns to this 50%, it fails to rally higher. This is important. So now when we break back through this zone, again, this is when we can apply our classic support and resistance. Then that zone holds and drives price lower. And that is going to be it for how we look at our rejection blocks and our zones there.